Okay, this is a quick update. It is Tuesday, February 6th, 2018, and it's just about 10 minutes after 6 p.m. New York time. So this is the Bitcoin dollar. During the early New York session, we were talking about this low and that price swing high here, that candle where my cursor is, and then that pullback. And very often what we can do with this second entry opportunity is we don't get into the trade on the signal candle. So there was a few things that were sort of missing with this candle anyway on that signal. Bollinger Bands weren't really separating the way they should, the way I would like them to. They need to be separating, showing a sign of strength. There was no divergence here in the CCI, which was good. And then the MACD histogram very often will sort of lag and then eventually roll over and follow the trend. Now, this is the first signal in the opposite direction of this trend that's been in place for like a couple of days, a few weeks. So that's a good thing. That's the first thing we want to identify. It's the first thing we need to look for. Now, there might be another one. There's probably going to be another range of consolidation and then another continuation breakout trade, and that continuation signal candle might develop on the 4-hour chart. We'll take a look at the 4-hour and the daily chart in the next update, but on this one I just want to specifically focus in on the second entry opportunity. So if you again go back to the membership area and you watch the videos on the continuation breakout trade, we get in using a 3-pip or 3-point entry when we get a valid confirmed continuation breakout signal candle. Everything is lining up perfectly for that signal for it to be a 100% certified continuation breakout trade. This one wasn't so much because of, again, with the divergence in the Bollinger Bands. The Bollinger Bands weren't separating the way I would really like to see them, showing that sign of strength. There was some divergence here in the MACD histogram, which led me to believe that there would probably be some pullback and I should probably wait. That being the case, when it pulls back, it usually goes back to the level that it broke out of, the level that we used to identify the signal candle. We see this pattern over and over and over again. And we wait for either a 30-minute, we also watch the 1-hour chart, and we wait for a Tech 1 trade right here at support. So we use the Tech 1 trade in two different locations, either trading a reversal off of major support or significant support or resistance. That's the Tech 1 trade. We trade it off of significant or major support or resistance, or like this, where there is a breakout. We can identify the breakout. We can identify that it pulled back down and retested the level that it broke out of, and then created the Tech 1 candle pattern for us to expect that the trend's going to resume and move higher. So that was our entry on the close of that candle. Of the close of that candle, I believe was 50 or 59. I'm sorry, 70.59. So we're using psychological levels, and we got an opportunity to use Fibonacci levels. Now there's a price swing. There's a low here, the high there, the pullback. We can certainly use the Fibonacci tool and go to a smaller time frame and try to look for extension targets. That would work. There wouldn't be anything wrong with that if you were short, if you were trading off of a shorter time frame than the 1-hour time frame that I'm using. I don't like to go anything less than a 30-minute. It doesn't mean that you can't trade it. Of course you can. You know, you can trade the 30-minute, the 15-minute, 5-minute. A lot of people do it successfully. I don't. I prefer to take these bigger trades and wait, which means I'm going to get fewer trades. But in my opinion, the way I trade it, the way I like to trade, the amount of time that I'm spending analyzing a trade and waiting for a trade to hit its target, I prefer to do it that way. I'm just much more comfortable with it. But it certainly does not mean that you couldn't go to a 15-minute chart or a 5-minute chart to look for the candle patterns here. Now, and the extension targets to use these price swings here. But remember that Fibonacci retracement levels, they're not only going to show a pullback the way we were able to identify the breakdown on the daily time frame over the last couple of weeks to trade it back all the way down here to 5,800, but we can use it in the opposite direction. So if it's going to be a bounce, if it appears to be a bounce, it's possible that it will run into a Fibonacci retracement as resistance. Sometimes it'll act as support on a pullback because, for example, let's just take this out. I'm going to draw the Fibonacci tool, let's say from this price swing low to that high, and we'll identify that pullback there. So you would do it a couple of different ways, and you can see and look for divergences. So you would go with the overall low here to that high and draw it to that pullback retracement there. whatever that might be, let's say a 50 or 60%, and then you'll have some extension targets. And then you'll draw from this level to this level here, and then identify the retracement and look for the extension targets. And sometimes those extension targets will overlap. You'll find a convergence of a couple of different Fibonacci levels. It works a lot better on the larger time frames, but the price swings don't always create the opportunity for you to do something like that. It's something that you can't force. If it provides the opportunity, then of course take advantage of it, but you can't force it if it isn't there. So okay, so back to what I was saying here. So there was an opportunity that you could certainly, do something like this. 50% retracement. The candles held at the 382. We would be looking for this potential price target up here, this extension target. So you can see where they're starting to line up. What we have here is several. I'll go ahead and do another one. I just don't want it to be too confusing in here, but we'll take a look at it and see what it looks like. Using another chart program, it works out a lot better. Let's see if I can do this. That pullback here. So it went deeper than the 618 here. There's the 618. It went deeper than the 618, but the candles held at the 50. So again, we got another extension target right up here and another extension target right back up there. That's the extension target for the depth of this retracement, this one here. And based on that price swing, that A high, B low, 382 retracement, there's another extension target right back up here. So there's a convergence right here of two price swings on the way up, the Fibonacci extension targets, and now I'm going to go ahead and remove these so that you can see where I'm going with this and what I want to show you. So I'm going to remove those, and then I'm going to tighten up the charts. And then based on the last solid price swing low here on the 1 hour time, remember this is relative to this time frame, we've got an A high. There is a waving movement here, but for the most part you see that it is a clean high and a clean low. Considering all the candles that are here, we've got a clear high and a clear low. That's the most recent, in my opinion, A high, B low. There's the 618 retracement lining up right there at that psychological level. So there's four things here that I want to point out. On the way down, if price is going to run into resistance, it can run right into a Fibonacci retracement level. There's the 618. Common Fibonacci retracement level. It's also sitting very close to the 8,000 psychological level. Notice how when I move my cursor right there, the 8,000 psychological level is sitting right there. That's a potential profit target magnet. It's where people are staring at it. That's what we're trading it into. That's what we're expecting. We're expecting it to actually go through that level, but it may fall just short of it. But it is a solid psychological level. It's a price magnet. In addition to that, it's also the 618 area on the way back up, and it's also the convergence of these two price swings on the way back up with these extension targets based on the depth of the retracement. It lines all right up there, right around the 8,000 psychological level. So when we get into the Tech 1 trade here at 70.59, the price target, our price target on this trade here, it's not over with. It hasn't hit the 8,000 yet. It's only gone up as high as 78.50, just underneath 78.50. So it has more room to go. This is our price target right here. Now remember, this is different than trading off of the daily chart. Most of the updates that we've been trading or that we've been analyzing and talking about lately is like the daily chart or the 4 hour chart, and then occasionally we'll go to the 1 hour chart. But we're looking at a larger trending move that took place over the course of a couple of days and several weeks, or a couple of weeks and several days, and we wanted to know where it was going to bottom out. We wanted to know where it was going to find some kind of a bounce, and could we trade that bounce? Could we expect that there would be a significant retracement? And we do have our opportunity right here, and we're trading it to the 8,000 level. So I want to show you how all of this comes together. We've got, again, two Fibonacci extension targets based on the move back up that land right there and converge right at a major psychological level along with this 618 retracement level. There's also another double bottom here, a little tweezer right there, right here, right around the 8,000 level. I know that that looks like something like you're sort of reaching, but that's not the only support or possible resistance on the way back up that it would run into. Remember, it's all of this information that I showed you before I showed you that little tweezer bottom there. That could just add an additional support level. If that was the only, it was a support level, but if that was the only resistance level right there, and I was using that as a target, I probably wouldn't consider it much. I mean, I wouldn't pay attention too much to it. But with doing all of this technical analysis here and identifying that these levels are going to line up correctly, this is a perfect opportunity for me to use all of those tools. The market doesn't always provide these opportunities. It doesn't provide this type of price structure, the way these patterns are setting up. It's not, you have to wait for it. What I just showed you might be really interesting, and you may not have used anything like that before or seen the opportunity like that where there was multiple levels to give you a solid signal, a solid, clear, I see it. That is a clear possible resistance, like definitely a possible resistance where price would move to. I'm trading it to that level. There's nothing wrong with that trade. We've got a lot of technical analysis uh, pointing in this same direction, giving us all of these forms of confirmation. Um, and again, it's relative to this time frame. But the next time you start looking for these opportunities, because this is so powerful right here, the market, the price swing, the behavior, the structure may not be there. So don't force it. If it's not there, don't force it. Just leave it alone. You will get the opportunity to use the tools like this and to find, just clear, eye-opening opportunities that are so obvious once you do the work and you investigate and you find and you uncover. Using these tools appropriately, you're going to cover these safe trades, these good, solid take profit levels that will provide a lot of money and a lot of opportunity. I mean, it's a great opportunity. But again, remember, we can't do this every day. I don't do this every time there's a bounce and every time there's a reversal. Again, don't force it. Don't force it. If you don't see it, if it doesn't make any sense, don't worry about it. With enough practice, you're going to get the hang of it. You will. Start off with the simple price swings and the simple extension targets and the simple ones that are very, very clear. Those are the ones that are going to be the best opportunity for you to trade. When you have a system in place, whether it's mine or anybody else's or your own, the best opportunities are going to be the ones where you clearly have no doubt in your mind that you've done the right thing. You've controlled your behavior. You're controlling everything. You're controlling everything about the trade, the entry, the exit, the stop, everything. It's critical. So this one should hit the 8,000, maybe go a little bit higher. If it does, we'll try and trail this one a little bit higher. And then again, after that, we'll wait for another continuation breakout trade. We're not going to talk about the 4-hour and the daily chart just yet. We'll talk about those in a few hours.